fact, most of the members of Congress who passed the bill had not read the bill before they passed it, because it's that extensive. They just kind of went off what they'd heard about the bill, and now everybody's reading it. But of course, that is not the way politics should be done. And people like myself who are interested, I've been looking into the bill before it was being passed, and I've been telling people about it before it was even passed. And so let's look at some gains and some losses, and let's look at some strategies. And again, depending on your perspective, some of these things may not be gains or losses that may actually flip for you. But gains that we want to look at. So there is an increase in the standard tax deduction. So for those who don't itemize, the standard tax deduction is higher. There's a tax deduction for seniors that has been created. So senior citizens are going to get a new tax deduction. A tax deduction has been added for income from tips and overtime. So people who get tips and overtime, they're going to get a new tax deduction. A tax deduction has been added for buying a new car that's assembled, at least assembled, in the United States. And this, of course, is to boost the U.S. Car industry. Households earning $500,000 or more per year may not have to pay the alternative minimum tax, depending on what's actually happening with their income, so that will benefit those households. Business owners can continue to deduct up to 20% of income. There was a bill actually in place that was supposed to expire this year that has been extended, so that business owners can continue to deduct up to 20% of income. The child tax credit has increased. Also, people who have a baby between 2025 and 2028 will be given a deposit, like an incentive deposit sent directly to them to support new families. There's a tax deduction given for adoption. So again, supporting families, those who want to adopt, you will get a tax deduction during this time when the bill is enacted. There's a decreased tax on inherited wealth up to $15 million. So people who are inheriting wealth are going to be taxed less. So there's always a tax on inheritance. There's a decrease on that tax. Now let's look at some losses. The tax on short-barreled rifles, short-barreled shotguns, silencers, and other guns was removed. Now that tax was there to de-incentivize people from purchasing these, because the reality is not many regular citizens purchase these. A lot of people who are out, with ill intent purchase these. And this is why the tax is in place. It's a pretty hefty tax. Just to be kind of a barrier to them, but it was removed. So we want to, pray into increases in violence, because we've seen a lot of, gun violence from people who are out mass shooting. We want to be praying into that. Another loss is that there is a loss of Medicaid, or there will be, for adults ages 18 to 65 who are not disabled and do not have children under the age of 14, unless they document 80 hours of work or volunteering or training per month. So 80 hours a month is about 20 hours a week. That's part-time status. So if a person is on Medicaid and they do not receive part-time work, volunteering, or training that is documented, they will lose their Medicaid benefits unless they're disabled or they have children under the age of 14. It doesn't apply to them. Same thing is true for SNAP benefits. Adults ages 18 to 65 who are not disabled and do not have children under the age of 14, unless they have 80 hours per month, documented work, training, or volunteerism, they will also lose SNAP benefits. And so it's the same thing for both groups. And that's the same group of people. SNAP costs will shift from the federal government to the state government in 2028. Now, most of the rest of this is going to affect the next fiscal year, 2026. This will happen in 2028, that shift of SNAP from federal government to state government, which means individuals on SNAP in fairly wealthy states will not be hit too hard, but those on SNAP in the poorest states, which are going to be the ones that need SNAP the most, they'll be hit pretty hard, because the state won't be able to afford to pay SNAP benefits the way that the federal government has been paying. Affordable health care, also known as the Obamacare Act, affordable health care will not be available to many legal immigrants and others. So there are others who will also lose affordable health care, but many legal immigrants will also lose it. Additional losses. Education loans will be capped at $65,000 per student with a $20,000 annual cap.